Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. Mortgage Minute today being brought to you by our friends over at VIP Mortgage. When you're ready for that new home, when you're ready to restructure that existing loan, VIP Mortgage has the products that are best for you. You just need to give a call, 800-306-1990. I will put you in touch with the right people to help you and get your loan closed. I just heard this statistic yesterday, and it just blew me away when I heard this, that 25%, fully 25% of the pre-approval letters that are issued by lenders, 25% do not close the loan even though they've told the buyer that they're going to close. 25%. And it kind of correlates with something I was sharing with you in the last segment a little bit about one of the big credit unions, military credit unions, that the folks at some of the credit unions and the big banks, they do a lot of different things at these companies. They've got a lot of responsibilities. And I find that, for the most part, there's some really, really nice people there. And, there's some goofballs, but there's goofballs in every industry and every place. Nice people. Way, way overworked. And if you get one of the credit unions or the big banks, they're doing all kinds of advertising, but they build a different form of infrastructure than what your mortgage banker will do. The infrastructure that they build is they've got a man or woman sitting at their mortgage desk, and I can tell you this because my son used to work at Bank of America, so I understand exactly how they do these things. But they have somebody that they're a teller today. They decide that a promotion, they're going to move them to be maybe a personal banker. Then they might go to a loan officer within a branch. And they get all these people coming in. They've got the tellers that get a bonus for promoting the idea of you going to the mortgage officer or the loan officer there. And again, they don't have the infrastructure. So what they've done is you go to the loan officer, they look at your information, they might take an application or ask you to bring back an application. They give you a rate quote, but now they're doing that 20 or 30 times a day with different people. They don't have enough people helping them. So what ends up happening is they might tell you they can do a loan, but how are they going to get it done? Are they going to get it done on time? In today's environment, when you've got less than 3 months supply of inventory in most areas of Southern California, it becomes very, very difficult for them to get the loans done as quickly because I've told you before, I lead a lending team. I chat with you on what we call a discovery call, initial call to see what is it that you need, does it make sense, how do we structure it? And then there's a whole host of great people that work together to make sure that you get what you need when you need it. We obviously need the assistance of you, your realtor, real estate professionals, escrow, title, all these other people. But for the most part, we're working as a team to help you. A lot of times when you go into the big institutions, they have to do the processing and verifications and collect all the documentation. One individual. They get a great rate. And this is one of the issues that I find a big problem with. And I hear this a lot of times on some of the commercials that come across radio and TV as well. They're driving so many people to what they call a call center. And you don't have the ability of doing your own due diligence to find out, do you like that individual? Can you work with that individual? Can they be a trusted advisor for life? Now, I just looked at a listener's scenario yesterday, and from one of these big credit unions, he was offered a rate that was very, very attractive rate. I looked at the rates that VIP Mortgage offers, and they can't come close to that rate. And I continued the conversation with the gentleman, And he said, yeah, but we're 10 days into the loan or 10 days into the purchase contract, and they haven't done anything. And I said, So basically what ended up happening is you did some rate shopping, you got a great rate, but they can't deliver. I said, what if I give you a tank full of gas at $1.20 a gallon? And I'll just let you know when I can give it to you. I said, yeah, I get it now. Rate shopping doesn't mean anything if he loses his home. He bought a home. He put an earnest money deposit down. He's 7 days away from the contingency removal for the loan. And they haven't even started. So my commentary there is, do you really want to be rate shopping? How important is the rate if you don't get the property that you want? Think about that. How important is the rate if you lose the property? Now you can take the risky approach. Here's a risky approach that you could take. You can do the contingency removal and hope that you're qualified and keep going down the road hoping. That gets kind of scary because you remove the contingency because you know the institution's got the money to do it and you know you're a good risk. But now you get down at 45 days and you still haven't got a loan and they say, well, you're going to lose your earnest money deposit if we don't close in the next 3 days. What control do you have? Was it worth shopping and saving that $10, $20, $30 a month? Now here's the next part of that. Yes, you go rate shopping and you might save a couple of dollars, but let's continue. Remember, we got to continue the whole story. We're not going to close on time. Maybe you will. The anxiety of the entire process, there's another issue for you to consider. The professionalism. And then you get to the biggie. The biggie is how long do you keep your loan? Now, I want you to understand this concept because how long you keep your loan is twofold. Everybody gets not everybody. A lot of people get a 30-year loan. That's the most popular loan, a 30-year loan. But if you take the number of loans done in America and divide that by the number of mortgages done every month, so the number of homes with loans divided by the number of mortgages done every year or month, however you want to do it, it tells us that in America, on average, we keep our loans about 5.2 years. And I know everybody tells me, but that's not going to be me, Ron. Okay, maybe it won't. $20 a month is $240 a year if you're shopping, and you find someplace that can save you $20 a month. Now you save $240 a year, $1,200 over the life of that loan, the average life, again, with using that 5-year period. $1,200. Now you're talking about buying a house, which is going to probably cost you somewhere between $300,000 and $700,000 in interest over the life of the loan. Again, I don't know what the exact numbers are in your scenario, but depending upon your purchase price, it's going to cost you $300,000 to $700,000. Now, you go to a call center. I wonder, if you go to a call center, do you think they're going to call you back and tell you when might be advantageous to refinance your loan? Probably not. If you go to the big bank, if you go to the credit union, do you think they're going to call you and tell you when it might be advantageous for you to restructure your loan? Probably not. When you go to a mortgage banker, a great one that prides themselves on being your trusted advisor for life, do you think that they're going to commit to contacting you every 6 to 12 months, at least doing an annual review with you? I know that is the process at VIP Mortgage. I've talked to them. That is part of their process, is to contact you and let you know what's the value of your property. What's the market doing on interest rates? Could it be beneficial to do a debt consolidation loan and save some money? These are all different issues that come about. And I'm going to share with you, it's not always about the rate, because if you can save money on your loan by restructuring or doing a debt consolidation, on average, when I look at debt consolidations for people, they're saving about $400 to $600 a month. A month! yet you're concerned about $20 a month on rate. Think about that. $600 a month is $7,200 a year. $20 a month on the rate is $240 a year, but you want to do rate shopping. I suggest that Walmart is a great place to buy Crest toothpaste. And you don't need to go to Vons to buy Crest toothpaste. You're going to be paying more money at Vons because you're buying the exact same thing. When you're buying a mortgage, when you're looking at mortgages, now you're talking about apples and oranges. Walmart is not going to give you the same level of service as Nordstrom. Both fine companies. Both serve their industries well. Not apples and apples. And now you're talking about a house and a home loan for hundreds of thousands of dollars. And you're worried about saving $20, $30, $40 a month. Doesn't make sense to me, but it is your call. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, random reasons your credit score could drop, some tax breaks you should be talking about or taking advantage of, and I'll tell you that we've got a tax expert coming into the studio on Friday. You don't want to miss that broadcast. You can reach me anytime. The off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.